Hi friends, in this video I want to give you deep insights about 3 stocks that are related to the consumption. And the reason I'm speaking about consumption related stocks is mainly because in the budget 2025, almost 1 lakh crore rupees is going to go back to the income taxpayers' hands as the income tax slabs have been relaxed. And when people have more money in their pockets, either they are likely to spend it or they are likely to invest that money. So sectors like FMCG, retail, auto, jewelry, airlines, all of these sectors where we go and spend our money are likely to see increased earnings in the next 4 to 6 quarters. And therefore, it becomes extremely important for us to understand what is going on in the consumption sector. Therefore, in this video, I'm going to speak about 3 consumption related stocks and will bring you some deeper insights that you are not likely to find anywhere else. If you are new to my channel, don't yet subscribe to my channel. Watch this video for the next 5 to 7 minutes and I'm pretty sure that you are going to not only like the video, you are also going to become a lifetime subscriber to my channel. With that, let's get this video cracking. The first company that I would like to discuss is Hindustan Foods Limited. Very nice picture that you see on my screen. But more importantly, many of you may not even have heard about Hindustan Foods Limited. Why? Simply because the company started back in 1988 and at that time the company actually miserably failed. It was only in 2013 when Vanity Case acquired the company and started to diversify this company and made it a contract manufacturing company. So what is a contract manufacturing company and what is the advantage of being a contract manufacturer? Allow me 30 seconds of commentary. So Hindustan Foods Limited as a contract manufacturer makes products for companies like Hindustan Unilever Limited, PepsiCo, Reckitt Benckiser, Bata. So predominantly it is making products for FMCG companies and other companies. It is not really selling its products directly to consumer like you and me, the way Hindustan Unilever Limited is selling. Now Hindustan Foods Limited has 2 big advantages. Number 1 is that they are well diversified manufacturer, meaning that they are not relying on one single product category. For example, they manufacture ice creams, they manufacture beverages, they manufacture shoes as well. So they are well diversified. They are not dependent on one product category. Point number 2 is that they are also not having their own brands. For example, if all of a sudden there is a damage to the brand image, the company is not likely to suffer. Let me give an example of that. Last year in 2024, Nestle had a big problem where it was in the news that there was high sugar content in the baby food and all of a sudden Nestle stock started to fall down. That sort of risk is not there in contract manufacturer companies like Hindustan Foods Limited. Now coming to the fundamentals of this company, have a look at my screen. You will see that the top line of the company in the last 5 years have been growing very rapidly. It used to do 492 crores of revenues in March 2029 and it is now gone up to 2,700 crores of revenues as of March 2024. So in the last 5 years, company delivered almost 41% CAGR growth in their revenues, last 3 years 25% and trailing 12 month 22%. Look at the profit growth also, last 5 years 51% CAGR growth, last 3 years 36% growth. So fundamentally the company has been growing hugely in terms of the top line and the bottom line. What is more interesting is that in the last 3 quarters, DIs have been upping the game and have got their stakes up from 7% to almost 14%, double the stake. And also in December quarter, FIs also picked up the stake from 3.39% to almost 5.45%. Now, natural question is that why the investors are flocking around this particular company? Couple of reasons that I can think. Let me give you my perspective. Number 1 is that in 2024, company entered into shoe manufacturing business. The board had approved 100 crores of investment in shoe manufacturing business and they acquired companies like KNS Shoe Tech, and there are a few other small shoe manufacturing companies the Hindustan Foods started to acquire. So Rahul, what is a big deal about shoe manufacturing? Point number 1 is the Indian government policies. Have a look at my screen and you will see that when we import shoes from outside into India, there is a duty of around 35%, meaning that Indian government doesn't want us to import shoes from outside. Why? Simply because Indian government wants to make shoes inside India. Why would Indian government want to do that? Because there is a lot of growth potential in shoe manufacturing market. Have a look at my screen and you will see that by 2030, Indian footwear market is likely to reach $90 billion. And if I do some maths, it comes out to be around 19% CAGR growth from now up until 2030. Also in budget 2025, Indian government gave policy support to shoe manufacturing businesses. Finance Minister announced a focused product scheme that is going to generate a lot of jobs, lot of turnover, etc. And companies like Nike, Adidas, who were reliant on China, they are likely to now move into China plus one strategy, which is India, and therefore we are going to see huge manufacturing in India. The second important aspect of Hindustan Foods Limited is their ice cream business. Have a look at my screen, you will see that they have announced so far almost 500 crores of capex. So if you read the first paragraph here and if you total the sum of the capex enhancement that the company is doing in their businesses, you will come to almost 500 crores of capex injection that the company is doing in their ice cream business. And whenever a company injects capex into a business, their profits and their revenues are likely to grow because they're enhancing their business. So these are some of the tailwinds that I see with this sector as well as with this company. Have a look at the valuations now. Last 5 years valuation, median P of this company has been very, very high. Right now the P is well below their median P. Again, I don't know when you're watching this video, please go and check the latest data. Also, if I look at the PB ratio of this company, again, last 5 years, median PB has been around 16.4. It is right now trading at around 9. But again, please have a look at the data at the time of watching this video. Now, could this company continue to grow their top line and bottom line at the rate that they have been? Again, I cannot speculate here, but I've given you a lot of details. And if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It motivates me to do more research for you at zero cost. Also, you can consider joining my YouTube member community because I post almost on daily basis, bringing you a lot of insights, data-backed analysis on my YouTube member community, and that will help you become a better informed long-term investor. The feedback of this community has been excellent. Simply go to my channel, press join button, or you will find the link in the description or in the pinned comments. With that, let's get to the stock number 2 now. The second company that I want to speak about was the darling of stock market in 2024. You all are aware of this company called Trent. In 2024, the stock was in the news for positive reasons, but 2025 is not turning out so great for Trent's investors. And the key reason investors of Trent are very, very fearful right now is because of a Chinese app or Chinese company called Shein. Shein is a fast fashion company that is entering into Indian market. Now, what makes it really, really interesting is that this company was banned in 2020 because it was a Chinese company, and at that time there were a lot of concerns about data and privacy and many other things, and therefore Indian government decided to ban a lot of Chinese companies. Shein was one of them. But in 2025, Shein and Reliance Industries have done a partnership, and Reliance Industries is formally launching Shein brand in India all over again. Now, there was a lot of politics also involved in this because our Commerce and Industry Minister Piyush Goyal had to intervene and had to give a written reply in Lok Sabha about why this company, Chinese company, has been allowed. And of course, there were clarifications around that this company will not have any rights or access to the consumer's data. Now, if I leave the politics to one side because I'm not a politician, my point here is that why the investors are speaking about. One of the main reasons is that Shein's pricing. The pricing of this company starts from as low as 199 rupees. Again, I do not know about the quality of the products that they are going to sell, but the pricing is very, very low. And Zudio, for example, their pricing starts from almost like 800 or 900 rupees upwards. And hence the key question is that the competition. Is Trent going to lose to Shein because of this tough competition? Also, mind you, Reliance's logistic network inside India is huge because of number of stores that Reliance has, and that has been bothering investors of Trent. And of course, Trent's valuation has been very, very high. It just found a reason to start tumbling down. So how serious this threat of competition could be for Trent? Goldman Sachs' view is that you are overestimating the competition. Actually, you are underestimating the growth potential of Trent. Because if you see the top line growth of Trent from December 2021, 1500 crores sort of a revenue has gone up to almost 4500 crores. It has gone 3 times in the last 4 years. Phenomenal growth in the top line. Also, if you look at the bottom line, it has gone up from almost 114 crores back in December 2021 to almost 497 crores in December 2024. Phenomenal growth. Just in case you are wondering whether the profits are coming down, because here in March 2024 quarter, we saw 712 crores of profit. It has come down mainly because this was an exceptional quarter. I found this data here, and the company clearly stated that there was one-off exceptional gain of around 443 crores. Because of this reason, this number looks bloated. If you look at the recent quarterly results announced in February 2025, you will see that the growth has been huge, almost 37% growth in the revenues, and the profit before tax has gone up by 38%. One thing thing that you need to know that this company is solely relying on the stores. They have 907 stores and they are opening stores like anything. 82 stores opened in just one quarter is huge number. They do not have much online presence, and this is where the competition comes into picture. And in my view, this is one of the weakness of Trent because they are solely relying on the store operations. If you look at the last 1 year's PE ratio of this company, the median PE has been around 183. Right now it is below that median PE ratio. And if you see the price to book ratio, last 1 year, the median PB has been around 51. It is right now below that range. Now we don't know how the competition will pan out in the next few quarters, but in my view, Trent's top line and bottom line is likely to continue to grow further because the market is huge and I think there is a big pie for everybody out there. Let me know what is your view about Trent. I would love to read your comments. With that, let's move to stock number 3. The third company that I want to speak about is from the jewelry sector. Why jewelry sector? 3 reasons for it. Reason number 1 is that in the recent budget 2025, import duty on jewelry have been reduced from 25% to 20%. That is going to make jewelry cheaper in India and therefore the demand is likely to go up. Second reason is that jewelry sector comprises of 85 to 90% by MSMEs, which is micro, small and medium enterprises. And in the budget 2025, there was a lot of policy support given to MSME sector, so it is likely to help these MSMEs operating in the jewelry sector. And thirdly, of course, the tax break. We are going to all save a little bit more money, and therefore if we spend that money in jewelry, which is one of the popular items in India, then we are likely to see more consumption in the jewelry sector. The earnings of the companies might go up. Now the stock that I want to speak about today is Kalyan Jewellers, and the reason I'm speaking about this stock mainly is because a lot of you asked me to comment on Kalyan Jewellers. There were a lot of comments that I was going through on my channel, so I thought, why don't I do some research about Kalyan Jewellers and bring you the latest and greatest insights about this company. The first key point we need to understand is from a fundamentals perspective. If you look at the revenues of this company in the last 5 years, very good growth rate. The revenues have gone up by almost 18% CAGR basis. Also, if you look at the debt to equity ratio of this company, you will see that the debt to equity ratio in FY20 used to be 1.3. It has come down to 0.5, meaning that their balance sheet has become much more lighter as the debt to equity ratio has become lower than 1 now. However, there are 4 narratives in the market that we need to understand. This is an extremely important point about Kalyan Jewellers, so please pay attention to this particular commentary now. Point number 1 is have a look at the shareholding pattern of this company. You will note that promoters since September 2024 has started pledging their shares. So 19.30% shares were pledged in September 2024 first time. Pledging simply means that a promoter is taking loan from somebody, and also as a collateral or a guarantee to that loan, they are pledging their shares. They are saying that keep my shares, and the implication of pledging is simply that if the promoter is not able to pay back the debt, then the company that has given the loan can very well go and own these stocks. So generally, pledging is not seen as a positive sign for the company. Now the $1 million question is that why promoters had to pledge 19.30% of the stakes? And here is what I found. Have a look at my screen. You will see that in their shareholding pattern, there is a company called Hydel Investments Limited. It's a FI, it's a private equity firm. And since December 2022, they have been constantly selling the stake in the company. They used to hold 26% back in December 2022, and gradually it started to come down to 9.17% in June 2024. And in fact, if you look at in September 2024, they got rid of everything. When Hydel Investment Limited was selling the stake, who was buying these stakes? Mainly DIs. Have a look at this screen. You will see the DIs holding went up from 2.58% to almost 11% as of March 2024. Also, you will note very interesting pattern here that in September 2024, promoter stake went up from 60% to almost 62.90% because actually the promoters were also buying the stakes from Hydel Investment Limited. How do I know that? There was an intimation by the company to the stock exchange that they have got a stock purchase from Hydel Investments, and that's why mainly the promoters had to go and pledge the shares because they have to borrow the money to buy the shares from Hydel. And this was confirmed by their one of the promoters, Ramesh. You can read this commentary here that they have acquired shares from WP. WP is the arm of Hydel Investment Limited. You can read this news as well. So all in all, the promoters borrowed the money by pledging their shares so that they can buy the shares from Hydel Investments Limited. And that's why you see September 2024, promoter stake went up. Now, is it a good thing or bad thing? Just put yourself into the shoes of the promoters of this company and you will get your answer. Because if a PE firm is continuously selling their stakes, you will have to go and protect your company, and therefore the company promoters have gone and borrowed the money. Now, the second big narrative about Kalyan Jewellers recently is that there was a rumor on the social media that income tax has raided the company. Also, the company had overvalued the inventory the company hold, to which in the earnings call presentation, their promoters clearly confirmed that this is all rumor. There has not been any IT raids to the company. And from an inventory level perspective, they said that we go through some multiple levels of audit. Again, I think these are all allegations. These are all rumors which promoters are trying to defend. We do not know what the truth is. This is out there, and I'm just simply stating the facts to you. The third key concern is about their franchisee business. So one of the investors called them that we have heard that your franchisees are leaving you. What is really going on here? Can you update us? To which the promoter said that actually what they have done is new franchises that they're signing up, they are changing their terms and conditions. There are no changes to the terms and conditions of the old franchisee. That's what the management commentary has been about. So all in all, there has been a lot of issues with this company in the social media, which the promoters have tried to clarify. We do not know what the truth is, but that's the picture I wanted you to understand in terms of what is going on behind the scenes, so that you at least understand the details in terms of what is really going on. If you look at the valuations of this company, last 1 year, the PE ratio, median PE has been around 88. It is almost trading at that level now. And also, if you look at the PB ratio, in the last 1 year, the PB has been around 13.7. It's almost at that sort of a level. So that's it. That's a lot of information from Kalyan Jewellers perspective. I'm not either way telling you to buy, sell or hold, but this information will help you at least get some clarity. So in this video, I've covered so far 3 consumption stocks. I would love to know from you which consumption stocks are your favorite. Let me know in the comments, and also let me know in the comments why do you like a specific stock. I hope you enjoyed this video, you learned something new, and if you did, press the like button. Let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. Finally, you can also consider joining my YouTube member community. The feedback of the community has been excellent. You are going to gain a lot of insights almost on a daily basis. With that, I hope to see you in my next video. Until then, keep rocking.